Okay, so there's something massive happening in global finance, kind of flying under the radar. It's not a flashy headline-grabbing story, but believe me, it is a fundamental shift in how money itself is about to work. We're talking about the tokenization of money market funds. Let's dive into what that actually means.
Right off the bat, you need to understand this isn't just some science project anymore. We are way past the let's try it out phase. This has become a full-blown strategic transformation, and it's being led by the biggest names in the game. That's a signal you just can't ignore.
And when I say the biggest, I mean the absolute titans of the industry. You've got firms like BlackRock, Fidelity, and Franklin Templeton. These guys aren't just dipping their toes in the water. They are actively building the future of institutional finance on these new digital rails.
So what on earth is a tokenized fund? Really, the easiest way to wrap your head around it is to think of it as a digital twin for your investment. It's the exact same asset you know and trust, just represented in a brand new and, honestly, a much more powerful way.
Let's unpack that a little. At its core, you still own a legally recognized share of a traditional, regulated money market fund. So the underlying investment, that doesn't change one bit. The revolution is all in the wrapper. Those shares are now represented as a digital token on a blockchain, and that simple change unlocks some absolutely incredible new abilities.
And this is where the difference becomes so clear. Just look at settlement. We go from waiting until the next day, T+1, to settling within minutes. Think about operations. We're moving from clunky, manual, 9-to-5 processes to something that's programmable and runs 24/7 automatically. But the real game changer here is composability. Traditional shares are stuck, locked away in their own little silos. These new tokens, they can talk and interact with a whole universe of other applications right on the blockchain. That's a huge leap.
So how does this all actually work under the hood? I mean, it's not just about minting a token and calling it a day. You need a really secure tech stack to connect that token to the real world without things breaking.
Which brings us to this really fundamental challenge, something people in the space call the Oracle problem. See, blockchains are their own little self-contained universes. They can't just go browse the web to find a fund's price or its net asset value. So the big question is, how do you get that critical real-world data onto the chain safely and securely?
Well, the solution is a system of secure data bridges called oracles. Here's the basic idea of how they work. First, decentralized networks, like those from Chainlink, pull data from a whole bunch of different independent sources. Then, all that data gets mashed together, aggregated into a single tamper-proof source of truth. Finally, that super secure data gets delivered on-chain. And that allows the smart contracts, which are just self-executing bits of code, to work correctly using real-world info. That data bridge has to be absolutely rock solid.
Of course, building an entirely new financial system isn't exactly a walk in the park. It's not like you can just flip a switch. It takes a whole ecosystem of different companies all working together to build these new rails for finance.
And one of the biggest hurdles is just the fact that we live in a multi-chain world, right? There isn't just one blockchain. There are dozens of them, and that creates a ton of complexity. You've got different token standards, money split up across all these different networks, and the compliance rules can change from one chain to the next. For a big institution, that fragmentation is a major operational headache.
So getting past these challenges takes a massive collaborative effort. You have the traditional players, the banks, the custodians, working hand in hand with digital asset specialists. We're talking about Chainlink for data, companies like Fireblocks and Taurus for custody, Signum for digital banking. Together, all these players are forming the connective tissue between the old financial world and the new one.
And then you've got regulation, which plays this really interesting double role. On one hand, it's a constraint because, hey, these tokenized funds have to follow all the same securities laws as everything else. But on the other hand, it's actually a catalyst. Regulators are starting to see that tokenization can create markets that are safer, more transparent, and way more efficient. It just reduces a lot of that operational risk.
All right, so let's get to the big question. What does this all mean for the future? What's the so what of all this? Well, the long-term implications are pretty profound, and they're pointing towards some major disruption.
First off, the entire operational stack of finance is about to get seriously compressed. Think about all those middle office jobs, things like reconciliation, record-keeping, NAV delivery. A huge chunk of that could become fully automated by smart contracts. We're talking about a massive leap in efficiency.
And second, the role of certain middlemen could shrink a lot. As these assets become natively programmable, as they can be used as collateral directly on a blockchain, the need for some of those traditional custodial and distribution roles might just get smaller and smaller.
When you boil it all down, the ultimate goal of all this tech is pretty simple. Automate everything you possibly can and get rid of the middlemen where it makes sense. It's really about compressing all the layers of the financial system to make it faster, cheaper, and way more open.
Which brings us to a final and I think really critical thought here. The very definition of what makes a successful asset manager is being rewritten right before our eyes. The question is no longer just who has the most assets under management. It's becoming whose assets are the most intelligent, which fund is the most programmable, the most interoperable, the most efficient on-chain. That is the quiet revolution, and it's not some far-off future thing. It is happening right now.